JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 3rd of December 2021. So yeah, welcome everyone. Welcome to this Friday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So yep, check it out here on jfdbank.com, and yep, click on the research tab right there on the top. So now then, jumping into the charts, the first one I want to pick up here is Nikkei 225. So just a quick update again. So far so good. Everything's according to the plan right now. I mean, what I talked about this week, that if this area, this upside line taken from the low of the 20th of August, continues to hold, then we might see a nice little rebound here. So we're getting that. The only thing is that in order to maybe go for a bit of a larger move to the upside here within this potential triangle pattern, this is what I've mentioned as well recently, we would still need to see maybe a push back above this 200-day EMA. So that's why for now I'm being very careful. Yes, I'm considering maybe a push higher. Of course, now we will have to consider this move higher only next week. We'll keep an eye on the European and the US equities today, how they perform. But if those are in the positive zone, then well, maybe we could see, like I said, this one climbing and back up here a little bit, going in on Monday. Shanghai Composite also pushing nicely to the upside. If you remember, I also talked about these two lines here, which could form a nice little triangle pattern. And you can see we broke the downside line here, and moved above this the high of or should I say the highest point of November, near the 3,602 zone. And what I said to you previously, that if we push nicely above that barrier and stay above that barrier, then yes, of course we'll continue aiming higher, where our next target could be the 3,625 zone right here, marked by the highest, or actually let me just, yep, that's correct, the highest point of October. Now the German index, DAX. So looking at this picture here, you can see that the index managed to remain above this upside line taken from the low of the 11th of December of 2020, but at the same time, yep, continues to trade well below this downside line taken from the high of the 19th of November. So for now, I would say we will remain a bit on the careful side here, because we don't want this to let's say, or should I say, we don't want to over speculate on this one too much. So for now, looking at this picture here, you can see that we could still go for a bit of an up move here. The cash index is currently sitting at around 15,360 zone, so we're now kind of back above this hurdle, above this 15,300 territory. I spoke about this yesterday, so we're back above it. So in a way, this arrow here that I've drawn earlier could eventually kind of play out, I would say. So for now, it's there is a chance for this one to still make its way higher, but again, we'll be very careful near this downside line here, and because if it holds, another slide could be possible. However, in either way, if you're not really comfortable with this right now, what you can do here is just wait for a breakthrough, one of these lines, one of these little trend lines, and then kind of consider the next short-term directional move. So if we take a look at the high of yesterday, and that's roughly around that 15,373 territory, the cash index is currently sitting near this barrier. So a nice good pop. This is how you could kind of, in a way, measure yourself and measure your entrance here, because a nice good push above this barrier, above yesterday's high, could open the door towards higher levels here, towards this downside line, and then yes, we could, like I said, take it from there. Long story short, for now, of course, although it could present some opportunities in between these two lines, but if you're not really comfortable with that, I suggest then to leave it there, and maybe just wait until we get the some sort of a trigger here, which could kind of give it a better boost, or maybe hit it strongly, and we would see the decline. So if you're not really comfortable with something, guys, if this is if a certain position doesn't really meet your setups, what you like, don't really touch it, rather just observe it. There will be an opportunity always. Of course, keep your eyes on today's news as well. We do have the NFPs coming out later on, so that's going to be quite interesting to see how it performs. Certainly from UK, we do have some information services, PMIs from the UK and Europe, and of course from Canada, we do have their unemployment rate as well. So their employment figures are coming out too. So we do have quite an eventful day today. So maybe we could see something triggering some of these instruments, and then we'll just kind of take it from there. But for now, from what we're seeing at the moment, I would say be very careful, be very cautious, and of course keep your eyes on some of these levels. And one of the levels that I mentioned is this yesterday's high near the 15,373 level. Now, jumping into Dow Jones Industrial Average, so yesterday, very nice reversal. As you can see, we rebounded nicely from that 200-day EMA, pushed higher, and this upside line, taken from the low of the 29th of January of this year, provided a very nice hold up. So we tested from underneath. It acted as a good area of resistance. So the question here is, can we see a further move higher? Well, the cash index is currently sitting at around 34,673 territory. So we're not far. We're near this upside line, but can we go and push above it? Well, we'll just have to wait and see. But still, I would prefer maybe to wait for a push above this barrier here, the 35,000 mark, approximately around there. At the same time, the index would be placed above the 100-day EMA, and potentially more buyers could join in. So keep that in mind. For now, we're observing this one carefully. Of course, we're considering the fact that recently we did have those strong declines. So in a way, if this upside line somehow continues to provide resistance, well, guys, maybe another slide could be possible. So let's not forget about that. Okay, so good morning to everyone I can see in the chat room there. Good morning to everybody else who's joining in as well, guys. I hope everybody's having a wonderful start of Friday. Now let's have a look at the DXY and dollar index. So this one pushed higher. So after rebounding from that 21-day EMA, it's now making its way closer to this downside line taken from the high of the 24th of November. Now, if we get a nice break above it, then of course this is where we'll get a little bit more comfortable with higher levels. We could go for these for the 96.64 level, or even the highest point of November near the 96.94 zone, and then so on, so on. So yeah, for now, yes, we're seeing a nice little push higher, but can we overcome this downside line? Well, we'll just have to wait and see. And if we do overcome that, then yes, I will aim for slightly higher levels. Now jumping into gold, and this one so far so good. If you remember, I talked about gold, and I said that in a way, if it continues to trade below this upside line, this which I called neckline, and if it continues to trade somewhere below this 1782 zone, then yes, we could see a further move lower. And yesterday, when I picked up on gold, I said that if it drops below that 1774 territory, it could open the door. This move could open the door towards lower levels, where we could then aim for that lowest point of November near the 1759 zone, and then of course if it gets broken, then we could go lower even. But for now, let's go slowly on this step by step, and again, also keep your eyes on the NFPs today. WTI Oil, WTI Oil, here we have a nice little recovery. So after dropping nicely to the downside yesterday, as you can see here, we dropped below that 64.45 level. We moved lower. We didn't really reach the lowest point of August near the 61.76 level, and then we managed to reverse. And as you can see, this is one of those moments, guys. Well, I keep repeating this as well, that in a way, I mean, not in the way, but kind of sometimes wait for that daily candle to end and see where it's going to end today, because as you can see, a lot of traders probably were coming in here and selling and on this breakout, and that was correct initially, but by the end of the day, as you can see, it kind of reversed sharply to the upside. So we only got ourselves a nice little false breakout. So always kind of keep that in mind. In terms of the upside, now we pushed above this 67.43 level, and I mentioned this level yesterday, and in a way now it seems that if we do continue to trade above this, then I'll go for a bit of a larger correction here to the upside, and then yes, we'll go take it from there. We'll aim for that, like I said, this 200-day EMA, and if that gets cleared, this downside line is the next one. Jumping into BCHUSD, which is Bitcoin Cash, guys. Now, I do like to look at this one sometimes because it's sometimes very, very technical. And here, for now, you can see we're trading nicely above this. We're trading above this upside line here, taken from the low of the taken from the low of the 20th of July of this year, and we're very close to it right now. So of course, whenever we get closer to a trend line, we're always kind of there is a good chance we could see a break of it, of course. And another thing as well, I mean, probably some of you have already noticed this this little pattern, which potentially could be seen as maybe a little head and shoulders pattern here, with the neckline roughly around that 543 zone. So if we break this upside line, I'm keeping a close eye on this 543 level. If we clear that, then yes, everything's looking quite nice here for the sellers, and more of them could start joining in. We do have this downside line as well in here, tentative of course, but nevertheless, so far it's playing out. Like I said, if we're looking for some downside, then yes, we need to see a break of this 543 level first, and then yeah, potentially more sellers could join in. For the upside, I would rather maybe stick to this little hurdle here, this 588 zone, and if we do get a nice pop above it, we will already be placed above this downside line and above the 21-day EMA, and then of course we just need to overcome the 100-day and the 200-day, and then, well, I mean, this could open the path towards higher levels. Evu, yep, just a second. Can I see the engulfing on the daily candle in WTI Oil? Let me just, okay. Yes, I mean, we could see this. So of course, this could be seen, yep, as an engulfing pattern. Now, again, this, yep, of course, this could be seen as a bullish engulfing pattern. Let's see if that's going to be the case. I mean, yes, I mean, we could see a push higher, and this could signal that little reversal here, potential reversal to the upside. So either way, I mean, it still kind of comes in line with the idea of some of my levels that I talked about here. For example, when I said that if it pops above this 67.43 territory, then yes, we could go for some higher levels. Also, I mean, because for example, yesterday, if you can see here, the candle did get a hold up. So this level here is quite an important one as well. Yes, we do. The engulfing pattern here does kind of put a bit more strength into possible idea of seeing this one moving a little bit higher. But even if we do see that move higher, we'll be very careful with near this downside line. First of all, we'll be very careful near the 200-day EMA and then near the downside line. But long story short, to answer if there is an engulfing pattern here, yes, there is. Good spot on that one. So this is a bullish engulfing pattern, and yep, which could potentially, yep, open the door towards some higher levels. For now, everything's kind of playing out. It seems like playing out in that direction. But again, that's why I'm saying. But but there's always a but, and given where we are right now, yes, we need to still keep an eye on these obstacles on the way higher. Now, jumping into a few pairs, AUDCHF very quickly on that one. So we're breaking again this key support zone near which is the lowest point of August, near the 0.65 1413 level, and let's see where this is going to end today, because at the moment everything's looking quite bearish, I would say, for this one. But to be honest, I mean, I would like to see, given that we already had quite a decent down move here, I would still like to see if we can stay below this lowest point of August. At the moment, yes, we're breaking it, but again, I'll take a bit of a careful approach here. And just I'm gonna just observe this one, although yes, I'm leaning a little bit more towards the downside on this one, but I would, like I said, I want to be I'd rather be safe than sorry, and if this by any chance, let's say, does move initially lower, but then by the end of the day still climbs back and stays above this 0.6513 zone, then, well, I mean, maybe we could go for a bit of a larger correction to the upside here going into next week. So, well, keep that in mind. USDCHF. Now this one's quite interesting, and of course we're going to keep a close eye on it today due to NFPs. But so far, this area, the 0.9176 zone, is doing its job and providing good support. Now, if we do drop below it, that's where I'm going to get a little bit more comfortable with further declines, and my next target will be this 0.91 zone, and then we'll take it from there. Well, pretty straightforward here, this one. For the upside, I would need to see maybe a move back above the 0.9251 zone here, and then, yes, we could consider maybe a little bit of a move to the upside. And now jumping into USDJPY very quickly, similar story in a way. So from the very short-term perspective, we're drifting lower. We got a hold up near this 112.73 territory, which we need to see a break off in order to go for slightly lower levels. And I'm still going to keep an eye on that one, and if we do get that drop, then yes, my next target will be this 112.08 level near the 100-day EMA, and then this upside line. So as you understood already, even if we move towards the downside here, anything up until this upside line taken from the low of the 6th of January will be classed as a temporary correction before another possible leg of buying. So the overall picture is still kind of bullish, but the short-term picture, yep, could show some weakness, and we could see maybe a move lower, but for that we need to see a drop below this 112.73 zone. For the upside now, this is where I'll adjust a few levels, and probably this is what I'm going to keep an eye on, this 113.93 level. A nice good pop above it, could potentially attract a few more buyers. We would be placed back above the 21-day EMA, and then yes, we could go maybe for that highest point of November again. Now GBPUSD. So this one's quite interesting, because previously when I looked at it, I said that if we drop below this 1.33 territory, my next target is the 1.3188 zone, which I would say it's a success, because just we fell shy by a few pips from reaching it, and from here we reversed and pushed back up. We're still trading below that 1.33 zone, and I would say as long as we stay below it, then we will continue aiming lower. However, of course, due to this day, due to the fact that we do have a bunch of data coming out, guys, be very careful. If we somehow pop back above this 1.33 territory, or even better, above the 1.3354 territory zone, then I will go for a bit of a larger, maybe larger correction here to the upside, at least towards the 21-day EMA initially, and then we'll see if we clear that. Then my next target would be this 1.3514 level. But for now, the fact that it's still trading below the 1.33 territory, yep, that creates a bit of bearishness. Now EURCAD, very quickly on this. So the broadening triangle here, yes. I mean, it's not an ideal one. I mean, and to be honest, in general, this pair has not been that very technical. I mean, okay, we can keep that broadening triangle for now here, but we still got violated. The upper side here got violated recently, and this week I would say. I mean, and we're now kind of drifting back down below it. In a way, I mean, the only thing is that. Of course, we could see this one pushing higher, but I don't really like these situations. If either we get a nice clear move here, but at the moment this is not really. This is just more of like a tease here for me. So in a way, looking at this picture, we can see that we tried to push higher today again, but we failed near this upper side of this broadening triangle pattern. We could see maybe even a drip back down here towards that 21-day EMA. The 21-day EMA is now nicely pointing to the upside. So, and in general, our oscillators are showing positive price momentum. So everything's kind of leaning towards the upside. The only thing is that we've seen these scenarios happening before, where, I mean, although everything's kind of, let's say, pointing to the upside, still it will make a nice clear move initially to the downside. Maybe it could test this 21-day EMA, rebound from it, take a lot of traders out, and then push to the upside. So if you're looking for something a little bit more reassuring, probably EURCAD is not the one to be in right now. However, again, we'll keep a close eye on today's data from Canada. For me, probably the safer option could be to keep an eye on the 1.4554 territory right here, which is the current highest point of this week. A nice good pop above it, yep, may open the door towards some higher levels, because a forthcoming higher high would be confirmed. And finally, EURUSD. So here we can see that we are having a nice little retracement here. So. Yep, the falling three method, or if you can call it the bullish three. So again, you can call it whatever you want, but the main thing for now remains is that we're still trading above this short-term tentative upside line taken from the low of the 25th of November. Can we continue holding to it? We'll just have to wait and see. Probably it could stay, let's say, flat like this, maybe till the news comes out from the US, and then make a better move. So again, keep that in mind. For now, I would say I'm just gonna observe this one. If this upside line continues to hold, then yes, I will aim for slightly higher levels here. But still, don't get me wrong, even if I do go for some higher levels, this move higher could still be classed as a temporary correction, because overall we're still trading below this, nicely below this downside line taken from the high of the 1st of June. And then we'll just have to see if it holds again. Let's say if we do see that move higher, we'll have to see if it holds, if this downside line holds again. If it does, then another slide later on could be possible, but that's for later. For now, for today, I'm keeping an eye on this upside line. For the downside, I would rather stick to this 1.1235 territory right here, in order to get a little bit more comfortable, let's say, with the downside. That's the lowest point, the current lowest point of this week. And if it holds, yes, a nice further drop could be possible. EVO, is the bullish 3 a strong signal? It sometimes is. Again, everything's very subjective sometimes. To again, it's you know, as always, when we do technical analysis, we do apply these this knowledge that we have, that we read, that we know, we studied for, and but of course we always take everything with a pinch of salt. So you look at those, I mean, you still always wait for that confirmation break. That's what probably is the more, you know, the better option to do. So for now, we can evaluate this. Yes, we can see it this way, and that's why I kind of stick to some key support and resistance levels instead. So whenever I get a breakout, then of course you adjust yourself accordingly, you adjust your positions accordingly, have your stop loss, I mean, where you find it comfortable to be, and yeah, we just take that little risk. So in a way, it could be a strong signal, but I mean, you know, nothing is really kind of 100% sure. So that's why, and like I said, unfortunately, that's the game we're playing here. Now, okay, so guys, I just wanted to quickly let you know that on Monday and Tuesday there won't be any Traders Espresso videos. I will resume on, I think it's going to be Wednesday, so, but I'll have to double check that. But again, next week is going to be a little bit tricky, as there are some training that I need to go through as well. So, right, for now, the plan is to you know, go ahead on Wednesday, but check the calendar that we have on our website, and yep, that might provide a bit more clarity. So, thank you very much, guys. Have a wonderful weekend. Stay safe. I hope you, like I said, I hope you enjoyed this week's sessions, and I really appreciate your time, guys. So thank you very much for that. And yeah, have a wonderful break. If you're having a break this weekend, have a wonderful break, guys. Yeah, thank you very much, and bye-bye.